Habitat Joint Venture Policy Committee. And as you know, we have these webinars monthly, and we're thrilled to have the third speaker in our loosely titled Carbon Markets and Finance sort of theme that we've been doing for the last several months. And so we're really glad to have Dr. Paige Olmstead from the Smart Prosperity Institute with us today. I did not request a copy of Paige's CV so I could, introduce you in all your fame and glory, Paige, but know that this venue, the PHTV webinar series, they are your path to fame and glory. So once you're here, I mean, the future is, it's endless. So we're really glad you can be here. And I will note today that I do have some family commitments, so we'll be stepping off shortly, but Ian Glass will carry on and moderate the session and the questions after. So I do apologize for that, but thank you for your understanding. So Paige, we really look forward to your talk, and thank you so much for coming today. And please tell us a bit about yourself as you start to.
Oh, okay. In the hot seat. Thank you, John and Ian and everyone who's joined today. So I'm Paige Olmstead. As John mentioned, I work for the Smart Prosperity Institute, which is an Ottawa-based policy think tank that looks at environment and economy issues collectively. And me personally, my background is in sort of ecology in terms of my academic background, and environmental policy. And basically for the last 15 years, the work that I've done at the Earth Institute in New York and with UNEP in Geneva and in Copenhagen and a few other venues has all been sort of at this intersection of economy and environment and nature in particular, and how can we enable doing things that are appropriate or useful on the landscape that can generate benefits ecologically and socially, also be good for the people that are working on those landscapes. And so sometimes it's thinking about incentives, sometimes it's thinking about markets, sometimes it's thinking about policies, but ultimately, how do we advance that in a way that makes sense for people? All right, so I'll throw up my presentation and make sure that folks can see it, and we'll take it from there. And I'll wait for a thumbs up. Oh, allow. Okay, you can see that? Okay, so I'm going to be in the other window, but it sounds like questions are being held to the end, so I'll just start talking and hope for the best, but do look forward to questions. And also, this presentation is at sort of the, relative to last month's presentation, for example, from Graham Gilchrist, which I really enjoyed. It really got into some of the nitty gritty on the challenges of thinking about grasslands and opportunities with carbon. This is taking a step, zooming out a little bit to the 30,000 foot level and thinking about how to access financing for nature, which I use in sort of a broad sense, but referring to avoided conversion type activities, management practices, restoration, all kinds of things in that realm, and why it's so hard to do and how we can address that. And so the other hat that I wear that I should have mentioned in my introduction is I'm a conservation finance specialist for the Nature Investment Hub, which is an offshoot of the Smart Prosperity Institute, a new initiative, which is what I'm going to be speaking to today and sort of why we created it. And part of this challenge of investing in nature, the Nature Investment Hub is hoping to overcome or support overcoming, and hopefully we'll be able to support folks that are on the call or interest you in some way, or you may see an entry point for yourself in how we move forward with the hub. So we'll welcome your thoughts and comments and questions today, but also certainly as a follow-up, and my contact information is on this slide and it's also at the end. So from a big picture standpoint, we're all familiar with some of the broad priorities that we have in Canada and also globally related to nature in terms of large-scale conservation, the important role of centering Indigenous leadership and how we advance that, but also not only conservation, but how we think about agricultural and other working landscapes and how they play a very important role in how we achieve climate and biodiversity objectives, and also how nature-based solutions, which I know is another component of this mini series, are a key climate and risk mitigation strategy. And this specific graph is related to biodiversity, but it's relevant for sort of nature as a whole. And something I think many of us understand is that there's a tremendous funding gap in terms of how we are intending to achieve some of these objectives globally and in Canada. And this study was done by the Nature Conservancy a few years ago now, but they were looking towards the 2030 for the SDGs and the Convention on Biological Diversity commitments to say how much are we actually spending and how much do we need to spend.
Big sigh, Helen.
Oh, sorry. Someone intervening, or maybe just not on mute. I'll assume that. So looking at this, tremendous gap and how are we going to achieve it, recognizing that historically a lot of this funding has come from public sources. And so when we think about nature spending, and again, I'm sort of using nature in a broad sense to include, parks and protected areas, but also things like Canada's Nature Fund or Natural Climate Solutions Fund, which supports, we'll say, farmers to do certain management practices on a landscape to avoid conversion or protect certain habitats. And there's lots of ways that you can cut these numbers. And so these are just intended to show the orders of magnitude. But ultimately, globally, we're spending about 70 billion a year. And according to that previous slide, the needs is on the order of 700 billion. And then when you think about that relative to what we consider social impact investment, it's certainly a much smaller proportion. And then when you take those same circles and think of them relative to private capital markets globally, it's a tiny fraction. And so the questions that we're sort of asking in the conservation finance space or nature investment space is, how can we access even a small proportion of some of these private capital market dollars and channel them into the places where we know they can be really beneficial in incentivizing and motivating changes? And part of the problem, which was discussed in the last session as well, and I'm sure many folks are familiar with that are working on landscapes or whether they're in government, that ecosystem service values and the benefits that we get from doing improved or avoided conversion or restoration or improved management practices are widely dispersed, often public, and lack robust markets. And so when we think about whether it's reducing floods or the costs of floods ultimately, or reducing the impact of droughts or improving air quality, there aren't necessarily markets equipped to enable those who benefit to pay for them. And a classic example is the range of different health benefits if you think about forest fires over this past summer, and how there was all kinds of economic data coming out about the impact of the poor air quality and the billions that cost various economies across the country. So there's an inherent recognition that if we were able to do more to reduce the impacts of those fires or reduce the fires to begin with, there would be a clear economic benefit. But the market mechanism for those who suffer when that happens and those who benefit are not well connected. And so that just leads to the point that nature investment is different. We're talking about non-traditional value streams. Ecological impact data is extremely important when we're thinking about investors. So not public or philanthropic folks who are used to giving money or creating programs for this, but thinking about the folks that operate in those private capital market scenarios, who are seeking very specific types of ecological impact data that may not be collected or collected in a way that communicates to them in the way that they are seeking it. Ecosystems, of course, are not closed systems. So if you're an organization with climate targets and you could say, well, we know that if we invest in this many windmills and it will generate this amount of GHG improvement over a certain amount of time, there's just a lot less inherent risk with that than there is with certain ecosystem-based activities where even if you do particular practices, depending on what else happens in that system, it's more variable. And many of the opportunities that do exist involve a wide range of partners. So it may not just be a landowner. There's also auditors. There may be certain NGO partners involved or folks supporting on the data side. And the more collaboration there is, even though that's a positive thing, ultimately make for higher transaction costs and difficult for folks to perhaps rationalize or take the risk on putting money into something that they are less familiar with, that then also has these costs on top of it. What's interesting, though, is that we know that there are new actors paying attention. And I'm just giving a few examples here that traditionally have not thought about nature in this way. The insurance sector is one. And they are folks, when you talk about data, who have excellent data and really understand the costs associated with climate change and how they are arising in terms of disasters and also heat and floods and all kinds of ways that individual landowners, municipalities are coping with these changes and the associated costs. And so they can really recognize by investing in perhaps ecosystems, restoration, avoided conversion, that can reduce costs downstream when disasters do happen. The financial sector, while moving more slowly than we would like, we are seeing activity in this space in terms of responsible investors, different regulations that are bolder in Europe, for example, but that if nature follows the path of climate, we can expect, sort of 5 to 10 years later, we may be doing the same things here. There's something called the Task Force for Nature-Related Financial Disclosures. And for those that aren't familiar, in the way that companies are being increasingly pressured to report on scope 1, scope 2, scope 3 emissions for climate and carbon impacts, there may be similar requirements down the line for nature, and so going beyond carbon and climate impacts for their various operations and downstream influence. And that will change demand in terms of what they're asking landowners or people operating in landscapes to do and account for. There's also the accounting side of things in the public sector, and we're seeing this particularly in municipalities where they're able to use green infrastructure and natural assets on their books in terms of how they make certain decisions, infrastructure investment decisions. And then also non-regulated businesses. So there's industries that are regulated in terms of their emissions, but then there's also businesses outside of that making net zero commitments that are increasingly seeking opportunities to look at what we'll call nature-based solutions, but can range in spectrum in terms of protection, reforestation, avoided conversion, and all these things that we've been talking about so far. And related to that, it's not just net zero and social pressure, but them recognizing, and I think agricultural landscapes are a great example, that they can, if they're concerned about the entire supply chain and costs of food, we'll say at the end of it, how thinking in the future and making those supply chains more resilient to change actually is a cost-effective strategy as well. So when we're talking about investments, just to give sort of a bit of clarity, this is a general investment spectrum where we're looking at, everything from grant support, which is dollars given, and you are not expecting to see those dollars ever again, the way it could work in a government program, for example. Up to 0% refers to you've made an investment, you're receiving all of that money back, but there's no return attached to that, up to what we'll call market or commercial return levels of investment. And why this is interesting or important is that if you're relying entirely on grant support for these types of programs and activities and encouraging them, there's an inherent limit. Whereas if you can create more sustainable funding mechanisms, even at a 0% return, that means that you're not relying on a government program that ends after 5 years, but there could actually be ongoing revenue generation that allows something to sustain itself over time. Or if there are actual opportunities to generate returns, it is where some of these other actors can be interested in entering the system. And there's a couple of benefits for that. But one of them is that for things that really are more appropriate to be grant supported, that it can free up some of those funds if there's other activities, and thinking of things, for example, that can generate carbon offsets, where you are attracting these outside buyers because they see an additional market benefit to that. And so I'm taking the same spectrum here to just talk about general returns. And on that, plotting a few of these different financial instruments that are applied in the nature space. Project finance for permanence is one that has received a lot of press lately because there's been a large public investments which leverage private investments into large scale conservation. Folks may be quite familiar with certain types of tax credits or incentives, trust funds, payments for ecosystem services. I've placed voluntary and regulated offsets sort of in the middle because it depends if you're thinking about this from the investor perspective or the person who might be receiving income from selling those offsets. And so they can vary depending on what you're talking about. But often this is folks' entry point and what they're focused on. And then there are some interesting types of bonds, and I'm going to give a couple of examples. And then some of these other types of instruments. And this isn't intended to be exhaustive, and I've pointed to our website as well that you can check out if you'd like to learn a little bit more about some of these And I can also answer questions, but this is just to illustrate. There's a variety of different instruments that are out there, and all of them have been created in order to package the delivery of certain ecosystem services in a way that allows multiple people to benefit in various ways. And so the idea is that this isn't happening on its own, and you need these instruments to bring actors together, and this will be the uniting force that will enable folks to say, this is what I can bring to the table and understand what they get out of it. And I'll go through a couple of examples to really show what I mean. And so the first one, and this is a real thing that exists, the California Climate Resilience Bond. And while it's in California and it's about forests, you could imagine almost any landscape here if you think about benefits that it can deliver, but I'll explain how this one works. So in California, as we all know, forest fires are tremendously problematic, not only in terms of carbon emissions, but in terms of property value lost, in terms of infrastructure damage, air quality, water impacts, etc. And so the idea for this bond was there's a recognition that the National Forest Service in the US had billions, upwards of $10 billion of deferred maintenance. And so these were activities that were approved to be done that understood had benefits and would mitigate the impacts of forests, but they simply did not have the budget to do it. And so what happened was they got a bunch of investors together, and the bond structure is an important part of it, but ultimately upfront capital in order to do these restoration activities. And for the sake of illustrating how the financial model works, we'll say that that amount was $8 million. It's not far off. So $8 million for restoration activities in a particular part of California. When you do those activities, there are obvious benefits for water, fire suppression, and then there's utility infrastructure is a big challenge when forest fires happen. And so utility companies are very interested in this as well. And so what the direct beneficiaries of this were the folks that were willing to pay into the bond. So the way that that worked was specifically municipalities, also specifically utility companies who recognized, and insurance companies, because they're the ones that have very high payouts when stuff happens to personal property. So all of these folks said, we recognize that activities done on the forest to restore it and reduce the impacts of fire are going to save us money. So we will pay over the course of 10 years, $1 million a year into this bond, recognizing that the benefits that we are gaining, or we're sort of banking on the idea that the benefits that we are gaining from this exceed that dollar amount. So that's the tricky part. You need to have enough of an evidence base, an understanding, and a sense of costs and how these activities will influence those costs to be able to say, yes, this makes financial sense for us. So if you recall, we said the investors put in 8 million over 10 years, they received 10 million in return. And so they generate, a return on their investment. The beneficiaries see that they've spread costs over a period of time rather than, the hit when disaster strikes, and believe that this puts them financially better ahead as well. So it's an interesting model if the challenge is the upfront capital is not available to do things that we think will avoid costs. And the bond is what unites the investors who recognize the opportunity and the suite, the implementation partners who will actually do the work, and coordinating the beneficiaries that are needed that are actually willing to pay for a particular outcome. There's something similar in southwestern Ontario called and some of you may have heard of this, but there's a conservation impact bond. And so briefly, it was similar in the sense that there was restoration done on Indigenous lands, and based on particular outcomes, there was an outcome buyer that said, yes, you've met the certain criteria that I expected to be met, and they paid back into the bond, and then these external investors received their return on investment. So you could imagine in this scenario, that outcome buyer could just directly pay for restoration, and it would save the hassle of creating a bond. But the purpose of doing it this way, it does allow for a whole other suite of people to be involved in the process to see that there's potential for revenue generation and to allow for that model to then continue. So it's an interesting and sort of emerging field, but I just wanted to give a couple of examples to highlight how, you can take a somewhat abstract concept like a bond and apply it to a landscape. But it's not straightforward either. And these things, in order to get them going and all the right partners in place, take time. I would be remiss if I don't address carbon and biodiversity offsets a little bit. Last month's presentation went quite thoroughly into some of the mechanics and what the market looks like and the different standards. And so I won't get into any of that except to say that the real challenge in Canada and why we haven't seen more activity in this space is the big question of additionality. And so within carbon offset projects, you need to be able to demonstrate that what you're doing is additional and will yield additional mitigation on top of what would have been happening naturally. And as was also really illustrated nicely last month by Graham, there's a ton of data needs, assurance associated with that, and upfront costs to the landowner, which can make it sort of prohibitive, or it depends, the scale of what you have available to determine how worthwhile that is. And so the opportunity exists. Carbon prices obviously affect that opportunity and your risk and concern about how that may vary over time. So it's possible, but it's not easy. And so I think there's ways that process could be smooth in order to make it more open and available to more people. And so broadly, before talking about the Nature Investment Hub specifically, for those with landscapes or that are thinking about what's happening in their lands, and thinking about how can I generate, are there other revenue or income streams available to me based on how I am managing my land, and specifically private or external stakeholders that might be interested. Just very briefly, as in the resilience bond example, consider the beneficiaries. So if what you're doing improves water quality, if what you're doing helps mitigate risks of floods or water quantity at certain times, who is downstream that is affected by that and that could recognize if I stopped that practice, that actually could harm them, and they'd be interested in motivating me or providing an incentive for that to continue. Another big consideration is data availability and also data needs, because having a baseline and being able to demonstrate impact over that baseline, regardless of the strategy, is always going to be necessary. And then also the scale of opportunity, and how that may impact potential beneficiaries or investors. Because most of the time when we're talking about, or many times when we're talking about conservation finance, there are pension funds, for example, that are looking for opportunities, or large banks and investment firms that don't want to talk about anything that's lower than a $50 million or $100 million opportunity. A lot of what happens on the ground is on a much smaller scale. And so it becomes a question of, can you bundle some of those opportunities, or how can things be packaged in such a way that some of those big dollars, maybe they can go into certain funds that allow for ongoing support, but there is a matching scale question that emerges. And then the last point here is just leverage. There are, and I'm speaking specifically of what we call sort of blended finance opportunities. And that's when either existing funding pools or public funding dollars, their presence enables or leverages other types of dollars to participate. And they can be used to reduce risk. So in some cases, you can have an opportunity where public dollars or philanthropic dollars can sort of guarantee the investment of an external partner. Differentiated rates of return just refers to the idea that perhaps a philanthropic contributor treats something as a grant or a donation, whereas another participant generates the return, or it allows for a higher rate of return for external participants. And this broadly allows you to increase your impact. But if folks want to talk about specifics on that, we can get into greater detail. The other thing I want to mention is Canada in general, and this is part of the motivation for the Nature Investment Hub. Many of the examples that we might hear about, and they could be agricultural equity funds or large-scale timber initiatives that lead to multi-million dollar financing opportunities for nature. In the US and Europe and Australia, 99% of the time, well, 100% of the time, effectively, those are taking place on private lands. So I'm assuming this is mostly an agricultural audience that are dealing with private lands anyway. So that doesn't exclude you from anything. But if we're thinking about Canada as a whole and the opportunity that we imagine existing, public and crown land certainly complicates the picture. BC is the only province at the moment where there is a policy that allows for the sale of carbon credits from crown lands, but that's the only place in Canada. And so you can't do that anywhere else. That may change, but there are definitely policy constraints. There's also the sort of relationship between federal, provincial, territorial, Indigenous governance that adds complexity on top of this. Certainly regulatory constraints, habitat and wetland banking, for example, is something that is often pointed to in the US in particular. Wetland banking is a multi-billion-dollar market because they made a change to the Clean Water Act in the US that essentially allows companies to go out, private companies that want to restore landscapes. You can restore a wetland and bank it. So it's more cost effective to do large areas. It's ecologically more beneficial. You can also protect it in a way that you think it was at risk. And so we're protecting it now. And then when development happens and folks who are doing that development are required to offset that impact, they can then go to this wetland bank and seek to it's sort of been pre-offset and then they are then buying a piece of it. And that has those sort of the large institutional investors that I was referring to before, like pension funds and major asset managers, because by them investing at the outset, they are banking on the fact that the value of that land will increase over time. And so it's seen as a really legitimate investment. And then the cost of those offsets per unit area are higher. And that's how they generate their return. The other challenge in Canada is that we have these vast intact landscapes that are carbon rich, but the additionality is limited. So many places, many of these instruments that we're talking about don't actually apply in the Canadian context. And this relates to why we have a limited ecosystem service market for carbon, certainly in public lands and in these places where there isn't additionality, and then also for non-carbon markets as well. And there's also a lack of intermediaries. And in the places in the world, I'll use the US again as an example, the California Resilience Bond was created by an intermediary that went out and said, hey, there's a business opportunity here. There's folks that can have money over here. There's folks that could benefit from these activities. There's people who the beneficiaries of those activities would then be willing to pay into that. But someone needs to initiate those various partnerships, bring folks together and actually get an agreement. Same with the Conservation Impact Bond in Southwestern Ontario. It took a couple of years of folks getting together to actually create that. And it creates a slow moving market. And so there's a bunch of needs to advance and scale investment in nature in Canada in these types of projects. And so I'm highlighting a few of the needs that we hear that are needed, including some that I have mentioned. So enabling policies, accessible impact data, early stage funding to help overcome some of that risk, capacity building support, often folks on the ground who are the ones that are expected to be able to sort of create a project out of thin air, need, whether it's technical support, some of that early stage funding to get there. Data is not available for them to generate the baselines, et cetera. And then just tools, guidance, resources that can take many forms to support all of those. And so the rationale behind the Nature Investment Hub is that if we can support various groups operating across the landscape in Canada, that this can allow for more investable projects on the ground. And if you have more investable projects on the ground, you can reduce transaction costs, you can reduce risk, and that ultimately can increase investment. And so the Nature Investment Hub, you can check out our website, but just to give you a bit of an idea, the intention is that it will be a hub of a range of different types of partners. And being a partner just means you're someone that is interested in the space and want to learn more and are thinking about investment in nature. A place where you can learn more about what's happening in Canada, access resources, either ones that we produce or relevant actors in the space have produced. And the intention is really just to help advance and build the field in Canada, given our specific conditions that don't necessarily apply elsewhere in the world. And so what we're trying to do is foster awareness and learning in a variety of ways, build the will and capacity to act, and support action and investment on the ground. And how can the hub help you? So I know there's a range of people from a range of different organizations, many of whom, or several of whom at least, as hub members have spoken to already, or are interested in various ways, or are thinking about some of these issues, but perhaps it's not a core piece of your mandate. And so you think it'd be really great if someone could advance this issue because it would help us do our work. That's where we're hoping to feed in. And so be sort of that interstitial or threading material that can help advance things that folks are interested in. So we really are, interested in what the community wants and then support that. But what the various ways that we're imagining supporting that are signaling policy needs from a broad set of actors, convening on collective action opportunities, having folks either suggest to say, I would love to learn more about this, and we pull a panel together, or I'd like to be really active on thinking about open source impact data on particular ecosystems and bringing a working group together to tackle that. And engaging with investors and bringing investors to the table so that they better understand the unique context that we have in Canada and what the opportunities are to support activities on the ground, curating resources, and then ultimately accelerating action. So that is it for me for today, to talk about sort of some of the challenges for nature, what we see as some opportunities, and the role of the hub in advancing those. So welcome questions today. And as I mentioned, in the future, or if you think about something at another time, that's great too. And so my contact information is here. I would be remiss if I didn't mention that the hub is supported by the Metcalf Foundation and the Echo Foundation. And yeah, welcome your questions. I'll stop sharing.
Just a reminder, if you do have questions, please feel free to raise your hand or type your questions in the chat box. And thank you, Paige. That was an excellent presentation. Oh, go ahead, Peter.
Hi, Paige. Great presentation. Thanks. So really interested in the slide you had up around what makes Canada unique. I think you're bang on. Those are definitely the same kinds of conclusions we've reached in exploring market-based approaches, particularly approaches that can help enable conservation offsets and things like that. We're looking at those for the boreal, where it's largely crown land, and there are large intact landscapes, like you say. And also where we're dealing with, most of our native grassland is on public land as well, that's leased to agricultural producers. So it's ticklish in terms of trying to apply approaches that are developed in other places that are predominantly private land, like you say, and making those work here. Interested in any comments that you might have on how do we wrestle that one down? And the other thing I'd like to ask, your point about kind of the lack of intermediaries who can help enable some of these markets. I mean, I think we're fairly clear on what our role could be in terms of changing policies to enable markets within governments. But I don't think very many provincial governments or even federal government in Canada want to be the ones to kind of completely operate a market-based kind of a mechanism. We want others to play. So what's in it for them? What has motivated those intermediaries in other jurisdictions to step up and do that work? And it is a lot of work. It's not just simply you change the Clean Water Act and miraculously things happen. There's a whole lot of moving parts to a successfully operating environmental market. You've got to have assurance mechanisms in place. You've got to have monitoring in place. You've got to have all of that tracking and all of the data systems, like you say, to enable all that. And it's a really big, onerous task. So for somebody like me who's looked at this and tried to kind of sell it within government, it's a huge undertaking, and it's quite scary. So I'm interested in your thoughts around how do we get those intermediaries to play, and And what about dealing with some of those areas where we probably will work a lot, which is on Crown lands? Long question, sorry.
Yeah, no, and I appreciate it. And, so the first one, the Crown land question, I don't have a good short answer. I think the longer answer is join us in wrestling with that. Because part of, I would say there's sort of two schools of thoughts currently, which is find a way to make carbon offsets work. In whether we change them or make a Canadian-ish version, but fundamentally following the carbon offset model, which might mean, is there a way that we can say those will be threatened eventually? We've seen the way that activity moves north, and so even if there's certain intact lands that aren't threatened now, we can imagine a potential future threat, and there could be a way that you could come up with a model that allows for that. The other strategy is to say, people created the model of carbon offsets to work with degraded landscapes, to work with RED, to work with avoided deforestation in particular contexts, and that's not our reality here. So is there an instrument? We recognize there's tremendous climate benefit from leaving these landscapes as they are. And in fact, global climate models are reliant upon the fact that certain things are going to stay the way they are. And so, is there an opportunity for a different type of, we don't necessarily have to call it a carbon offset, but another instrument in the way that these other instruments have also been developed, that could be meaningful to buyers, that don't have to follow the same rules, because we understand the value of that intact landscapes are more ecologically and beneficial to maintain and cost effective to maintain. And you just sort of need to create some parameters that make sense and get folks to buy into that. That's probably a harder, that's the long game, I would say. I would say that would be a better outcome, harder to get there than to say, is there a way we can figure out that carbon, dollars can make it there? So that's a long answer to your long question, and maybe not a great one. But it's something that I think a lot of people are wrestling with. And when you look at some of the folks around the world that are saying, I have $500 million to put into nature-based solutions, but I can't do it in Canada, I think there's a lot of people saying we would love to find a way to make that happen. And so, working with those various groups to figure out what becomes amenable and feasible. To your second question about what's in it for them, for the intermediaries, the ones that exist in the US are mostly for profit because there's a business case. And so I think part of the problem, it's this nascent, lack of projects. It's like a negative feedback loop, whereas the converse is a positive feedback loop. What I sort of illustrated in that one slide. The more projects you have, the more perceived opportunity is. And then there's more groups of people that say, hey, I actually see how my role as being an intermediary can accelerate this, and there's sort of a business case to be made. So I do think there's a role for government and a big way, and I know it's a different dynamic, but also philanthropy, for these data challenges that we have, and seeding some of these early opportunities. I do think that if we can have more examples on the ground of functioning projects, that there's a bit of a, if we build it, they will come, that some of those intermediaries, we have some in place. And if you think about some of the NGOs that can play a great role supporting with data, et cetera, I think some of it's connecting the dots. And then the other part is investing at a loss in order to get things going and demonstrate to folks that are more concerned on the profit side to say, oh, okay, I get it now.
So pilots and things like that could be an avenue. So I'm guessing that Jamie's going to say something about living labs, but anyway, thank you for your answer and thanks for a great presentation.
Sure.
Okay. Tom had a comment. Great presentation. Would you be able to share your PowerPoint? Just so everybody is aware, this presentation is being recorded and will be up on the PHJV YouTube channel by the end of today. So you'll be able to see the slides and hear the entire presentation from there.
And I'll just agree, Graham, sorry, with your comment there, that if you have a market and there's actually a way to connect folks, then yeah, if the business opportunity is there, folks will come out of the woodwork to take advantage of that business opportunity or become an intermediary.
Yeah, great. So, sorry, Paige, I took my hand down, but I thought I would just jump in. I don't think we formally met. So, Jamie Hewitt from Agriculture, Agri-Food Canada in our Resilient Ag Policy Division. So, great presentation, like Pete said. I'm not going to bring anything up about Living Labs, actually. My question was more around the build it and they will come. That's certainly something that, we've wrestled with too. I think that's something, the build what though exactly, and how is your investment fund? What are you building as that mechanism to draw people in? How are you balancing the reporting and administrative burdens on additionality, on tracking progress over time, on that verification step, and maybe what lessons have we learned, from an agriculture perspective, again in the carbon market and some of what was done in Alberta, some of the learnings we got there was that you needed a lot of aggregators to aggregate a lot of agriculture projects to make something out of it. And then in that aggregation, it bleeds off a lot of, we'll say, the benefits, and then producers, it stops to become a mechanism for change for producers. And it's like, if I'm doing it, I'll opt into this. Mm-hmm. Because I don't see enough value for me to actually push forward on it. So kind of a double-edged question there, Paige, and just wondering if you've got any thinkings on that.
Yeah, so sorry, if I can just drill down, then do you mean if
so first question is what mechanism, the build it and they will come, what mechanism are you selling to investors? How are you guys handling that? Well, and how are you balancing the resource burdens to report and administer that?
Yeah, so if by you mean the Nature Investment Hub. So we are, I would say we are, we do not house dollars for investment into stuff. We are really at that, I would say, kind of like network field support stage. So our intention isn't to pick projects and say, hey, investor, this is where you've got to put your money. Our intention is to support folks on the ground to understand what's available to them and understand whether their landscape could be viable for certain types of financial instruments. And then on the investor side, better understand investor needs and articulate those to people who could be developing projects. So I guess it is, indirectly making those connections, but we aren't, and we're quite explicitly not like a fund where we're out doing due diligence on particular projects and, that kind of stuff.
Helping to connect the dots then.
Okay. Yeah. And I think there is a lot of, and the reason why I think it's okay that, we're tackling agricultural landscapes, but also thinking about large scale conservation in the north, is that many of the constraints and challenges are similar. And so part of this, is an effort to just bring it from the conversations that we've had. There's a lot of people with questions and trying to figure out where they slot into this landscape. And so we're not necessarily proposing to have all the answers, but to at least bring those folks together so that they can wrestle them together. So from the policy question, there might be recognition among folks who work in a particular type of agricultural landscape that there's a certain impediment that is really important for them that's impeding them that might be quite different from elsewhere. And so we're helping to kind of, aggregate so that folks aren't, I have to look over here, I have to look over here, I have to find this example in the States that doesn't actually apply to me. And so, step one is kind of getting everyone on the same page. And then step two will be, what are those particular things that we can hone in on to make the most difference in the short term? So I get that that's kind of unsatisfactory, but that's sort of where we're at. Okay.
Yeah. And no early thinkings on that through you guys yet. So that's okay. What about on sort of, any thoughts on the lessons learned from other examples and pilots that have already been done, like I said, and that especially in agricultural landscapes that need to have those multi aggregators to develop the real something that goes into the system, whether it's an offset, whether it's a bond, whether it's an equity investment opportunity, and how that bleeds off and then adds to your administration costs. And how do we overcome that?
Yeah, I don't have a great answer. I think part of it is a data burden. Like the more, because so fundamental to any of this is understanding that baseline, understanding the potential impact over a particular time frame in a way that's reasonable. It doesn't have to be perfect. There's so much in the places where these markets are more developed. There's like point and click. You could open your browser and find out, very quickly in a particular zip code, canopy cover and soil carbon and all kinds of details that if we had better national or even regional data on particular ecosystem services, I think it would make the sort of feasibility opportunity more obvious to potential investors as well as landowners. And Graham, I'll be really interested to what you have to add. You were showing some maps in your presentation about, okay, here's where we've got public land, here's where we've got private land, here's where we understand what some of the gradients are for soil carbon. And that is not easy to pull together and not readily accessible and available. And so the more, and that's just for one dimension of one aspect of the challenge. So if we could, in a perfect world, if you could imagine having layers and layers of data, and as a for instance, there's an international organization that I have worked with, and they are desperately trying. Their clients are Aeromexico, HSBC. They are looking for large opportunities to do restoration in Canada. And they have pretty sophisticated remote sensing data and things like that, but are really wrestling with some of the policy barriers and just haven't been able to figure it out yet. And so, getting down to the nitty gritty of what the barriers are at the landowner side, what the barriers are at that aggregation side, and what gets lost in those sort of transaction or transmission costs, you could almost call it. And then what the barriers are for the folks with big dollars that say, I'm kind of ambivalent as long as it will give me X and Y and I've got my money tied to it. We're still, I think, teasing those out.
Great, thanks. Thanks for that answer. Interested in what Graham has to add for sure.
Go ahead, Graham.
Well, I did have a question, but I'll also respond to Jamie. So Paige, my question is, we've got a really good bad example. We've got Robobank funding a $2 billion facility to Maple Leaf, and they stapled to the mortgage a whole bunch of sustainability metrics. So we've got a good example of the financial market, doing work in this area. So my comment that, but David, your comment, it's look at really good systems in the States, but we hate big data. So you talked about, build it, they will come. Not to be flippant, but you've got a Canada's Grain Act. So if you pulled it out, you redrafted a new piece of legislation, switch out grain and put in carbon instruments, and switch out an elevator and put it in an aggregator, you now have a commission to regulate the standards and to regulate the guts in the middle of the market. And so you want pricing transparency, you want security of transactions, you want grade quality. So we've got the tools. It is at the end of the day, it's somebody slightly higher, possibly the minister. To answer your question about the commission challenge, Jamie, we just had a budget, so I would say any commission paid in any carbon instrument would result in an RTC. If you don't like paying commissions to aggregators. And then if we talk about the damage problem, if we borrow what happens in the States, we've got the federal provincial agreements, with crop insurance, and you've got a huge data trove of each contract that the federal government helps pay. I hate to use the word cross compliance, but the issue around the conservation of grassland was out of the States, the Soil Conservation Service has down to the county what the land rents are, just because they're tied into the programs. Not saying that to swear a dirty word, but you've got to report your crop insurance data to get your crop insurance contract, your cash rent data to the crop. So, and that feeds into a national database. So it's that, because ultimately that protocol came out of the U.S. experience. Paige, you nailed it. Is we've got policy, and we've got other issues that these protocols were built in another venue that don't fit well here. So, but back to my question, good examples of Robobank's 1% premium with the green bond. Have you learned anything from it, and what could be duplicated from that example?
I don't want to, I know of it, but I don't know enough to give you a great answer. I don't think so. I don't want to pretend that I can. But it's interesting. I think the challenge, yeah, I think a question that, the hub can help answer, and I don't mean the individuals like myself, but I mean through the participation of lots of different folks that are interested in the field, is, at what level and at what entry point, are we seeking engagement and to incentivize what activities? And I think what we're really trying to do is not have it be investor driven, even though it's called the nature investment hub. But we're ultimately trying to serve the folks on the ground to be able to meet their needs while acknowledging what opportunities may exist. And I know this is getting outside the scope of your question, and I think it's less of a risk in agriculture and more of a risk in other types of nature conservation. But there are a lot of folks that are, even talking about private capital markets brings about this fear of how this will corrupt, ultimately what we're trying to do. And if the money-making opportunity doesn't align with our values or doesn't align with what our goals and missions are. And I definitely think, that that risk is always going to exist. And so also part of the objective of the hub is to sort of bolster and support, whether it's agricultural communities, organizations or entities, ensuring that if there are private sector actors that are coming calling with what might sound interesting or attractive, that there is a say, or that there's enough familiarity with the system or what they're proposing so that you're basically not getting screwed, or that it's greenwashing, or that it's something that makes someone money but actually has no environmental or ecological impact on the ground, which is where the conversation around carbon markets has gone. And there's such thing as a good carbon project and a bad carbon project, and how do you know the difference, and how do you engage in that? And so, and I think there are corporate actors with good intentions. People with good intentions can have bad outcomes. And then there's people with bad intentions. And so, it's trying to tease through all of that. So I don't really have an answer to that specific, because I don't know enough about how it was felt and received by folks on the ground. But always, sometimes some of these ideas, and you can show a flow chart and it looks nice. But if fundamentally the beneficiaries aren't benefiting, then, it's not great.
Thank you.
All right. Well, I don't see any more questions. I'd like to take this opportunity to thank Paige for her excellent presentation today. If you do have further questions, feel free to either send them to Paige directly or send them to John, and John will forward them on. And again, thank you everybody for joining us for the April edition of the PhDAV webinar series.
Thanks again, folks.
I'll just add one last note. Thanks very much. Laura, I'm very familiar about the Conservation Exchange. But if you're wanting to raise awareness to other folks on the call, Smart Prosperity Institute is an advisor to that process behind the scenes, but other folks may want to learn about it. And that's about sort of biodiversity offsetting, essentially, as the Environment Canada is moving ahead with it. Thank you.